welcome to ET MSME Dialogues, Conversations under ET MSME Awards 2023. Our guest today is Sachin Gupta. He's the Chief Rating Officer, CareEdge Ratings, who is here to share his views on the road ahead for MSMEs in the backdrop of global headwinds and subdued growth. Sachin, welcome to economictimes.com.
Thank you. Thanks, Melanie. Pleasure to be here.
It's our pleasure to have you. Sachin, in the latest assessment that IMF has projected that world economic growth will slow from 3.5% to 3% and perhaps to 2.9% next year. It's a small drop of 0.1 percentage point for 2024. Now, this remains well below the historical average. What sort of an impact do you see this having on the global economy, which is limping, and especially on India's MSMEs?
Yeah, thanks, Melanie, for the question. It's very true that globally there is a bit of slowdown that we are seeing, and largely it is driven by those economies themselves, because there was, high inflation in those economies and which they wanted to cool down. So, especially US and EU, which are largely our export markets. In those economies, there is a clear dedicated effort to slow them down. And in that respect, the economies will grow at a much lower pace vis-a-vis what we have been seeing in the last 2 years or so post-pandemic, when there was a lot of revenge buying, etc. So now the question is how and in what way it will impact the Indian MSMEs. Now, the clear way to look at it is it's not so much how MSMEs versus the large companies, versus some other companies that will be impacted. It's a matter of which sectors will be impacted. And for us in India, the way I see it is that the export-oriented sectors, quite obviously, which are sectors like gems and jewelry, textiles, ceramics, some of the sectors which are, having both high export-orientedness and wherein a large number of MSMEs also play an active role. Those are the segments which will be impacted. So, and we are already seeing a bit of slowdown in the exports, and therefore the MSMEs which are more on the export side, and as I mentioned the sectors earlier, those are likely to be impacted. Having said that, there will also be opportunities for them to kind of move into new geographies outside of US and Europe, which are seeing this slowdown. And especially in the space where China plus one, which is coming through, where some economies are wanting to move out of Chinese exposures because large part of supply chains over dependent on China, and we saw there was a challenge, especially during pandemic. It created for them. So it's not an easy question to answer, but yes, in the short term, we can clearly see a slowdown of these MSMEs on the export-oriented sectors. But if I were to take a little bit more longer horizon, then we are say they are reasonably well positioned.
All right. Okay. So amid the pandemic, the MSME sector in India, and you pointed out to some of these issues, they grappled with issues ranging from, say, liquidity shortages, they had labor problems, reduced demand. They also have to contend with broken supply chains. Recovery is underway. And I think in Q1 of FY 23-24, there was a 33% surge in loan demand, coupled with reduced delinquencies. So NPAs have also sort of improved. But given this tough global backdrop that we spoke of earlier, how resilient would you say MSME in India could be in facing all of these challenges?
Right. So, very interesting question. And, I would really look at it this way, that how the first part of the question I would see is how well did we weather the pandemic storm? And while all the points that you mentioned are true, but if I look at it in terms of how much of it led to defaults, right? Because being a rating agency, we look at, their, debt paying capacity. And happy to say that for the multiple actions taken by the government and the RBI, while yes, they were stressed, there was a demand stress, there was liquidity crunch and all that, but it was very well weathered, both at the MSME level and at an overall economy level. And some of the actions which RBI and the government took were clearly positive. For example, the simple ECLGS scheme or the moratorium scheme which were launched. Essentially, the government did not really dole out any freebies per se, but they basically said that, okay, fine, you have to, honor your debt obligations, but fine, you can honor it maybe, after a year or after 18 months. And also, if for some of them, they kind of allowed them to take incremental debt. So it was not that there was a freebie, unlike a lot of other countries, where they doled out a lot of freebies and which had quite a debilitating impact in the post-pandemic region on those economies. In India, we saw mostly it was the moratoriums and the support being given in terms of extra credit to these entities, which allowed them to weather that storm by honoring their debt obligations as and when. Now, the second thing was how the recovery would happen. Once you allowed them to not pay the debt in time and give that moratorium, the interesting thing has been that post-pandemic, the demand recovery was quite robust. Mostly from domestic and also in the export-oriented sectors. And as I said, there was a revenge buying, etc., in US and other economies. So it allowed, especially MSMEs, to spring back quite fast. And that is where even when the moratorium and other schemes which were launched by the government, they kind of ended, we did not see any pressure in terms of their debt paying capacity, and they continue to honor their debt obligation. So that, I think, is really an outcome of the actions taken during pandemic, which allowed them to keep their head above water. And even when the pandemic kind of ended, they could really capitalize on the opportunities that were presented later on. So overall, it was pretty good. Now, if I were to look from here on, how we are seeing the growth, and for MSMEs, we spoke about the external sector being weak, and that will kind of have an impact. But on the positive side, what we are seeing is that the government has large amount of focus on manufacturing side. So if you see the whole Make in India scheme or the various PLI schemes which have come,
Realize.
some of them will have a very direct impact on MSME sectors, because MSMEs, if you see, are mostly the vendors who are supplying to the OEMs, which will be large companies. So in sectors like, say, whether it's food processing, or it is, say, textiles, or it is even say electronics, etc., where we are seeing that large projects will be set up. And when large projects are being set up, the MSMEs will be typically the vendors who are supplying to them. So whether it is the as I mentioned earlier, there's a China plus one opportunity which is there, which again, if I coupled lay over the India's Make in India campaign and the PLI, all these things in some ways are coming together to improve the India's manufacturing
Capabilities.
output. Yeah, output, and that is where the MSMEs will stand to gain. So over the next 3 to 5 years, if I were to see, MSMEs will should easily beat the GDP growth. GDP growth expectations in general are about 6 to 7% in the short to medium term, and in that period, MSMEs should grow faster than that, essentially because of the clear focus on the manufacturing side, which will benefit them in a big way. And also access to funding, is also improving. So one more.
Absolutely.
Yes, yeah. So because now banks are also focusing on MSMEs to lend in a big way. NBFCs are also there, which are providing credit to them. In that sense, we are reasonably positive, despite the external sector being a little slow, but overall level we are expecting the MSMEs to catch up on growth.
Let's hope that comes to be. So my next question to you, Sachin, is linked to the fact that you're a credit rating agency, and I want to get your input on the fact that MSMEs in India are so diverse, right? Just in terms of scale, maybe in terms of sectors, also in terms of geographical locations as to where they are. So how do you ensure that your methodologies and criteria are tailored to reflect these unique challenges and opportunities that different MSMEs encounter, given their unique businesses?
Right. No, interesting question, Miloni. If you see, India actually is in some ways also, our Indian financial system in some ways is unique, because unlike a lot of other countries, including developed countries, in India, RBI, more than 10 years back, decided to make rating, for any corporate which has an exposure of more than 5 to 10 crores, almost mandatory. So, there is a clear linkage, between a rating and the access to credit, which all the companies, including MSMEs, have. And if they have better ratings, they obviously get more easy access to funding at lower rates. So,
Right.
which is not really the case in a lot of other developed countries, especially for this segment of corporates. Mostly the large corporates enjoy the benefit of ratings. So to that extent, we in India, I would say, are fortunate to have more than 20,000 companies, right, which are rated, and they get the benefit of rating in terms of providing easy access to funding, and as I said, maybe lower cost of funding as well. Now, how as a rating agency we look at it, so initially when this whole thing was started by RBI in terms of providing the ratings to mid-sized and small entities, uh, rating agency, including CareEdge, we have formed separate teams. So there are separate teams and a separate vertical, which what we call as a mid-corporate group, is really works for assigning ratings to these entities. And in terms of our criteria, while the base, I would say the criteria, which is analyzing the business risk, the financial risk, the management, it's kind of similar as what we would do for the large company as well. But where the mid-sized companies and small companies we have to give extra focus on is a lot of importance is given on management. Because many of these entities are driven by either the promoters or some key individuals. So our rating analysis really factors in their capability in a big way as to how they will be able to grow the business, their risk appetite, their ability to on the integrity side, on in terms of their uh, competency to be able to do this. So that is one key difference. Second, what we have seen in terms of successful MSMEs, most of them are the ones who have been associated with some strong, large OEMs. So a lot of these ancillary, many of them are ancillary kind of providers to large OEMs. So if you have long-term contracts with large respectable companies, they are able to grow in a more orderly manner. So having such large long-term contracts with respectable large companies is again a key driver for them. Thirdly, I think we look at overall on the integrity side in terms of how they manage growth. A lot of times we've seen suddenly there is a big opportunity, they make good profits, but then how they are really using those opportunities in terms of whether they just go and buy a private aeroplane, because some of them do that. They suddenly get 100 crores of profit in a year, and they kind of splurge that. So those kind of things, again linking back to in some ways to the management's this thing, because they are not, a lot of times they are not very, they don't may not have a very professional full structure. So individuals become very important, and our ability to really read them and really understand their risk appetite and then provide the ratings is very critical. So as we speak, let me share with you that for care we have about, say, overall about 4,500 companies, and out of which about 1,500 companies or so would fall in this small and medium enterprises, which indicates that there is a large population of such entities which are being rated by us. And also we have multiple offices across the country, which provides us access to be closer to those entities and not really do all these ratings from Delhi and Bombay, wherein most of the large corporations are generally situated.
Yeah, India has about 72 million MSMEs, according to the latest data that has been shared by the government.
Right.
The fact that, you rate about 1,000 mid to small, I think there is a
There is a
lot
big,
of hope.
yeah, yes,
Right.
yes,
So, also want to speak about, the gap that exists. Now, for
right,
instance, there are medium and small enterprises that might not, actually want to go in for a ratings process. So, for the benefit of some of these enterprises, could you talk about the things that you have in place, the methodologies or measures that you have in place to address concerns which may be related to potential biases, conflicts of interest, and also in sort of holding yourself accountable? You've also talked about how you hold MSMEs accountable
right,
and criteria at which you put into place to ensure fair ratings, but also in terms of holding yourself accountable for accuracy and the
correct,
fairness of your ratings. And that's my
correct,
last question.
correct, correct. So got it. So one is in terms of, so two parts of the question as I see. First is in terms of how we look at providing easy access and transparency to these MSMEs so that they can really get themselves rated. And the second part is in terms of how CARE as a rating agency, how we are accountable and how we, yeah. So on the first part, our key channel there for reaching out to MSMEs is the banks. because considering their small size, it's not always possible to really, at the end of the day, I'm still not a very large corporation, and even banks find it difficult at times. But still, we engage very actively with the banking channels, both the private sector banks and the PSU banks, to really work with them to, get their portfolios or their entities which they are lending to rated. Because in a lot of ways, rating is a requirement for banks, because banks want to get their whenever they give loan, they need a rating. So therefore, bank in that sense is a very important partner for us, and we engage actively with the banking managers to really explain to them how it works. On our websites and other places, we have fully transparent criterias. In fact, we have very for separate industries. So say it's textile, how exactly we rate it. That criteria is there. Say it's a gems and jewelry, how we rate it. That criteria is there. So across more than 20 industries, we have our criteria which are fully available in the public domain, which are easily accessible to anyone, including the potential MSMEs which are ready. The second part to your question was in terms of how rating agencies, including CARE, make themselves accountable. So that I think is a very good question, because as someone who is rating and judging other entities, obviously we have to be accountable ourselves. We cannot be arbitrary in that manner. So over the last, I would say, 5 years or so, there has been a very clear effort for the whole industry and including CARE to be more and more transparent in terms of our rating actions. How, so for example, now there are clear timelines, and this is also a very regulated industry, so there are clear regulations with transparency of my criteria in terms of, if someone doesn't like a rating, there is an appeal process. So all those things have been put in place, both by the rating agencies themselves and also by the regulator, because they also want to have an oversight in terms of the shop is running fine, and we are not being arbitrary. We are giving full. All the decisions taken by us are objective. There is no conflict of interest. So those things are very well, and I would say rating agencies also have in some ways come of age over the last many years. We CARE itself is more than 30 years old. So in that sense, we have that experience to be able to really take a very nuanced and well discerned approach when we are rating, say, a small entity versus a mid-sized entity versus a large bank or an institution. So, but having said that, I think it's a continuous journey. We are also learning. India is also very fast evolving. And last 2-3 years, the way the whole global economic scenario has been kind of unfolding, they're very interesting times for us in that sense. How what happens in US, the interest rate actions taken there, and some small entity based in tier 3, tier 4 town, how it gets impacted. It's quite amazing. So in that sense, challenging but very interesting times for us, in terms of giving the right ratings.
All right. Thanks very much, Sachin, for a lot of insights. I think it was a conversation that kind of spanned a couple of topics, but I think, you've given us a good understanding of, I think, the road ahead for MSMEs, especially, as we end 2023 and step into 2024, and, the subdued global scenario versus a resurgent or, an economy as far as India is concerned, which is really chugging along just fine. So thanks very much for it, and also providing insights into how the ratings process has come of age, and how many entities can benefit by being a part of it. So thanks very much for your time and for your thoughts today.
Thank you, Milon. Thanks a lot, and pleasure being here on this show.
It's our pleasure to have you. Thank you.
Thank you.